Good morning, traders. It's Thursday, January 30th. Taking a look at the charts, we got the SP 500 daily chart, and the markets are starting to roll over. Yesterday, we talked about how they had this dead cat bounce, this oversold bounce off the 20-day, and it needed to find some traction and get back above the 5-day moving average, which is this blue line here. Overall, yesterday, it opened above it or at it, rallied up, and then got sold off to into the close with heavy volume. Today, we're getting more downside volume. The SP 500 down 0.7%, NASDAQ down 0.6, and we're back down testing this 20-day. Now, overall, this pattern here looks quite a bit like a bear flag. We've got a sharp drop. It's consolidating here in this little range, and it's on the verge here of starting to move lower. And if we throw a Fibonacci extension on there, we can get an idea of the downside target. We go from this candle high down to this candle low and to this rebound level, carry it forward. If you take a look here, you can see the downside is 31.89, which happens to be this, more or less, this spike low on this trading session right here. And if we start to break that, that will be a series of lower lows and lower highs, and could get a little more ugly. Now, if we were to just look at our cycle analysis here, we can go back a little further. The key here is that our cycles, our pink cycle here is breaking down below this red dotted line, and just yesterday it was threatening and it ended up closing just a hair below it. Today, the futures, you can see this pink line clearly below it, so it's starting to pick up speed. Last time we broke it, we saw the market go into a much deeper pullback, and then we had it again over here where we went into more or less a waterfall sell-off, and then it rebounded from an extreme oversold level. So that is where we are. We've started this sell-off, and really there's not a whole lot of downside potential based on just this pattern overall though, but it can still have a pretty good drop. Could be down another 2% or so to find support at this target level and this previous pivot low. Both of these will act as a support zone for potentially a bigger bounce or consolidation where it either trades sideways for a while and bonds would continue to move higher, or we see it start to break down for a much larger move based on the high, the low, this new high. The downside would be somewhere around 31-ish area, which would bring us through to this area here where we had some consolidation through here. This whole box somewhere in here would act as a support zone. So that's where we are today. Money obviously moving out of stocks. It's going somewhere. We're seeing it move into bonds. Bonds had a very strong day yesterday, and bouncing off that 5-day moving average today, we're trading higher, up about 0.3% on the ZB bond futures. TLT should be up fairly significant today. If we take a look over at gold, up 0.6%, so it's having a nice bounce. It's had a nice kind of rounding formation. It's forming almost what you call your little cup and handle formation or a little bull flag. Obviously, we had big news and big spike through here, so it's got some volume to eat through, but this pattern looks very strong. We can very easily see this pop and pick up speed and have another big run. Looking over at silver, up 1.45%. In the grand scheme of things, it really hasn't done a whole. It's negated about half of that drop that we saw that one day. Overall, it's still underperforming because it's more of a speculative type of asset class at this point. Looking over at gold miners, they had a nice recovery yesterday, regaining pretty much all of the previous session's drop. They should open higher today. They're trading slightly higher in pre-market trading, but you don't get the cleanest data in pre-market. So overall, we're looking for hopefully a continued move of flag here sideways, and then hopefully a big breakout. This pattern here, very similar to gold, except for this is potentially a little larger pattern, but overall we got a rounding formation. We've got the cup and the handle, very strong patterns. Usually the height of this here, you can usually see it 2 or 3 times the rally. So if we were to squish that to the upside, you take this, you're looking at a $2, $4, $6 move. So technically, if we were to break out of here, we'd be looking, excuse me, for the price to run up to potentially 47 to the upside, just based on that type of pattern and consolidation. Let's just grab a Fibonacci extension on here and see where the actual Fibonacci is saying we should be going. If we crunch this price down, just focus on the price, we can see Fibonacci is saying 45 up to 51 based on this current price pattern. So obviously we've got some good potential here going forward if we start to see this market break out, the stock market start to collapse, money pile into the safe haven, and those things really start to take off there. Last but not least, let's take a look over at natural gas and crude oil. Natural gas down 1% this morning. Looks like it's coming down for a test of the here. Could get a double bottom, some type of reversal. We are getting panic selling in the stock market from the looks of it in pre-market. Typically when we see panic selling, we'll see natural gas recover. So this could be some type of washout day in natural gas. We hopefully see it recover. We might get stopped out of our UNG position. It's a small position. We'll see how the day closes. But overall, natural UNG is actually holding up fairly well considering natural gas has been sideways and lower. That means forward looking, all those forward contracts that UNG is moving into is already pricing higher natural gas because it seems to be undervalued at this point. So that's a good sign. Hopefully we'll see the futures quickly recover here and kind of fall forward into that expectations, and we'll see UNG really start to lift off and move higher. Looking over at crude, down 2 1/3%. It's back down to test these lows at this 52 down over here. Obviously continues to be under pressure, and it's in high volatility mode, huge moves, big gaps, and it is going to struggle down here at support. We talked about it tagging here, having some type of bounce yesterday, how it hit the 5-day moving average. Now we're back down to this support zone. There is still more support all the way down to this 50-50. And the 51-50 area is a fairly significant level where multiple bars came down and tagged in that area, and also down around this, the really significant level will be this 51 area, which is where we had 1, 2, 3, 4 bars come down and tag each time it bounced. So there's still another dollar potential for it to really stretch to the downside before we might get a bigger bounce. But if it starts to break below that 51 and close below that, that's going to be pretty ugly. And we could start to see it head down to those low 30s that we talked about a long time ago. Last but not least, let's just move over to the VIX real quick. The VIX up 9%. We are still looking for, if the market does have this drop in the next 2 days, we should see one of these big spikes up into the low 20s. We talked about it, I think yesterday or the day before, that one more kind of leg down in the equities market should give us a big spike in the VIX, and that should reset the market for it to try and stabilize and decide which way it's going to go after that. But overall, if we do get the spike in the VIX, that should cleanse it, and we'll probably get some panic selling. Let's just take a look over at our panic selling indicator, which is this green one up here. More or less, when it gets above this blue line, that means there's panic selling in the NYSE, the big board stocks. Overall, we had the bounce back as an oversold bounce, a short covering bounce the following session. But overall, we had a long and dragged out kind of panic selling session, and that's usually a sign that we're gonna have another quick drop in the market, and we should see the VIX spike up. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.